Those clowns talking down the economy might be smiling today. As you've heard, the latest numbers aren't good. Retail sales were flat in April, the weakest result since May last year when the federal government delivered its first confidence-flattening budget. And these numbers could reflect nervousness ahead of the second budget. Australia also recorded an awfully big trade deficit, nearly $3.9 billion, described as a disaster by JP Morgan. There were big falls in iron ore and coal exports. The longer-term picture of volumes and prices shows the weakness in major resource exports. Coal was affected by port closures due to bad weather, so we can expect a rebound, but iron ore was hit by weaker volumes and prices, a function of the slowdown in China. Services exports are growing, but they're only a third the size of commodities. We're making less money on our exports, we're spending less in the stores. Victoria and the ACT saw the only meaningful rise in sales. The mining states are hurting, and New South Wales, the home of the housing bubble, was flat. People are obviously busy paying off their mortgages. Not much joy on the equities front either. The local market is down 4.5% this week. Global bond rates are rising as attention turns to recovery in the US and even Europe. Australian 10-year bonds jumped above 3% for the first time in 3 weeks as investors focus on inflation and exit shares. The banks took another bath. Metcash was hammered on asset write-downs and the scrapping of dividends. And all the bad news undermined the Australian dollar. It was weaker across the board. And that's finance.